Going into our Wealth Wednesday episode. Today, we're talking about the stock market, volatility, talking about Black Wall Street. And I think this conversation is very timely, seeing that this is Black History Month. The way I view things is that Black History Month is every freaking day. Learning about our history, learning about what makes us who we are is pretty critical to me. So I think that, I don't just celebrate Black History Month when it's February. It's all year round. So what I'll do is I'll go to our first topic, which is the market volatility. How many of you were looking at the stock market this week? Last week, remember, we predicted that there was going to be a lot more volatility, and it just so happens that there was a lot more volatility last week and this week. So, we're going to talk about that. I'm going to tell you about a few industries that can get us through this market volatility in 2021, because what's going to happen is if you don't have the right portfolio, you're not going to make it through this. That right now, if you don't have the right portfolio, the right actual plan, this 2021 year is going to be a doozy for you. So we're going to talk about strategy, how to pick industries that are going to win. We're going to talk about hedge funds, what they're doing and what they're actually priming to do. Typically, hedge funds normally make anywhere from 20% to 40% more than the average investor every year. Last year, they beat the average investor pretty handedly. And this year, they're looking to do the same thing. So we're going to talk about what they're looking at. Because again, my biggest thing is if you know what other people are doing, you have the best chance of winning as well. If my strategy is encompassed by other corporations and large hedge funds, and they're thinking the same way I'm thinking, well, then I'm never going to be out of the money in regards. Like, I'll always be in the right spot. So we're going to talk about what hedge funds are doing. And then lastly, like I said, we'll talk about Black Wall Street. Actually, I'm going to start with Black Wall Street because to me, that is a story that we need to talk about. There's an article, and I will attach it on here. Let me get right over to this article real quick. For those who don't know about our website, feel free to join us at on our live. You'll see our website. It's www.theway, and the way is spelled W accent aigu on the E. .com. So for you to get that actual URL, you actually have to have a cell phone or something and utilize that to get the E accent the right direction. But that's our website. And on there, we do have different ways to give back. We have a philanthropic arm. We have our relationship segment. What's going on, Janelle? Marucci, what's up? So, definitely if you like the content that you're hearing on this, feel free to check out our website and, donate. I think the beauty of what we're doing here at The Way is really to empower folks, but also to give you access to information that you may not be able to get regularly. As a former advisor, I remember, I had to be paid to tell people what I'm telling you guys every Wednesday. So for me, I'm doing this out of the freeness of my heart. I want to make sure that you all are stepping into the right space, into the right year, doing the most. So, if you want to help us, hit up our website and donate. The money is going to go towards us building out a program for kids. We're trying to build out an investment program for kids. My wife is actually heading this up. So the goal is to start teaching them how to invest at very young ages and actually buy them stock and let them actually work through the process at the ages from 5 to 18. So if you're a mother or father with kids and you're interested in something like that, donating to our organization is going to help us to actually put that curriculum together so that we can actually propose and present that to different school districts. And we're going to do it digitally. That way we can get a lot of buy-in from everyone, regardless of where they're located. Okay. So that's a part of it. So to go to our website, it's www.theway, and way is spelled W-E accent aigu. And if you don't know what that accent is, just check out our our hashtags. You'll see it everywhere. Babe, can you put in the way .com on there so they can actually see it, and I'll pin it so that way folks can actually get to us. All right, so everyone, so for all those who are joining us now, I want you to head over to not only our YouTube if you want to see what I'm looking at, but we're going to first start talking about market volatility part 2. All those who are invested in AMC, invested in GameStop, I hope that you listened to me last week and got the hell out. Okay, I'm going to pin this real quick. Let me pin our website so you guys can find it. This is how it's spelled. And we did this purposefully because we wanted it to look different. We always like to do things differently. So theway.com, that's our website. And, click on that and you'll check us out and see what we're about. But, okay, so if you were with us last week, hopefully you did not get scammed by keeping the GameStop shares. If you haven't seen, they have dropped significantly. And I think that that is just a part of doing business. If you don't know, you're going to get screwed. That's just what it is. And a lot of folks that were getting on the hype train of GameStop because of the Reddit article, you were doing well, right? And then you stopped doing so well. That is exactly what was going to happen. And for folks who don't know the market and know how it's played, you're going to get scammed. So let's talk about GameStop real quick, right? So the reason why GameStop, of all of the stocks that were boosted up, dropped so significantly compared to the others is mainly because its fundamentals were flawed. It did not have strong fundamentals, right? And anytime there is a run on any stock, the market has a way of reverting to the mean. What does that mean? Reverting to the average. So let's say a stock is average doing this nice and slow. If there's a blip in the radar and now that stuff's done, it's going to go right back to nice and slow. It'll go back to what it was prior to that issue. That's just market 101. So if you don't know that, you're going to get screwed because you're going to be the kind of person that spends $200, $296 on a GameStop share of stock, right? And then the price is going to drop to $92 and you just lost half your money. Like that's literally what happened to a whole bunch of people. Now, we also talked about Robinhood. Again, I don't want to kind of rehash old segments, but if you haven't listened to us for a long time, I definitely recommend that you go through the IG lives that I've done because we talk about platforms. We talk about why I don't encourage Robinhood or any of its counterparts or peers because I want a bank that has a brokerage. I do not want an app that allows me to trade stock. There's something about that does not ring well with me just because I want to know that when I have leverage. So like, let's say I have 100 grand in my account, my finance account, I can go to the bank and say, hey, give me a loan for 50,000. They'll say, oh, you have 100 grand in our investment platform. Okay, cool. Here's your loan without even having to sign two things like boom, boom, done. Right. Whereas if I ask Robinhood for a loan for $50,000, what are they going to give me besides a weird look? They're not a bank. They don't have the ability to do certain things. They cannot leverage my investment with them to help me out as an individual investor. So because of that, I have nothing and I want nothing to do with apps like Robinhood. Now, I'm not going to bash Robinhood. I'm just saying that they're not my flavor because again, they're getting sued right now. And why are they getting sued? Because they literally removed stocks off of their platform because they didn't want to participate in this hike of money. And again, the intention was actually a good thing because they were allowing you to sell your position, which is the most important thing to do. Right? If you made from $20 to $296, selling your position is actually what you should be doing. You shouldn't be doing anything else besides that. So they only allowed you to sell your position, right? But for some of the folks who sold their positions, the other stocks that were in that Reddit group, if you wanted to invest in them, those stocks were no longer listed. And a lot of people lost their money because they had invested in those stocks and they were no longer listed. See, an app can do that because they're not really regulated the same way as a bank charter. or as a real broker dealer that's connected to a bank charter. There is certain rules and regulations that they have to abide by. And there's a lot more red tape, there's a lot more bureaucracy. So they can't just get up and switch something up overnight. They're too big to do that. But Robinhood's very small and they can shut certain things down whenever the hell they want. And guess what? For all those who have Robinhood accounts, I want you to now renegotiate that relationship. Ask yourself, are you comfortable knowing that the brokerage platform that you're on can shut down your account or basically prevent you from making revenue or even selling your shares of stock that you happen to invest in at the right time? Are you okay with that? The same day that they did that, I tried to go and buy shares of another company called SNDL. And I was able to buy it. And I was like, okay, cool. So TD Ameritrade's fine. So that's what I mean. Like you want to have access to platforms that are going to give you the access to stocks, mutual funds, margin accounts, all that stuff. You want access to all of it because at some point in this conversation, we're going to be talking about margin accounts. We're going to be talking about how you can use the bank's money to leverage your investments and make a killing, right? We're going to talk about that, but there's no margin account with Robinhood. They don't offer that because they're not that type of company. So folks, when we talk about these things here, I want you guys to really take a look at what we're talking about and understand that we're trying to help you. We're really trying to help you to position yourself in 21 because if you're not positioned correctly, you're going to fall for it. And I don't want to see any of you fall for it. You guys are like family to me. I call you all the Way Tribe, by the way. My wife and I coined this. Like anyone that listens to our podcast or comes into our lives, you're the Way Tribe. We are looking out for your best interests at all times. And that's a part of a family that we're creating, a community we're creating. So that's the purpose of this. All right. So let me just say, what up, Mortal Group? What's up, man? Hey, you're welcome. That's how we do it. You know how it goes. Just keep following us. You know what's going to happen. Ashley24, how you doing? Kay, thanks for being with us. Aunt Bev, what's going on, dear? Janelle, what's up? Vulgarity. Rashad Duco, what's going on? Hello. Ogu, hey, what's going on? We got some new folks on today. All right, good. I love how this is going. Beauty minded. Another Wardy. Oh, what's up? Johnny boy, you're on time. All right, cool. All right, so folks, let's get into this content. I want to make sure that we are on top of this. We make sure that your time is used valuably. So the first thing we're going to talk about is hedge funds. All right, so I'm going to show you a screenshot real quick. And this is why it's important for us to know we need to move based on what other people are doing. Okay, check this out. All right, so hedge funds are hunting frothy names to short even after GameStop. What is that? This is an article just basically talking about the hedge funds that lost some money off that GameStop short, and now they're hunting for other stocks to literally short and make back some of that revenue. Hedge funds make money doing this. They make money finding stocks that are going to go down. They bet that it's going to go down. They make a killing. They also find stocks that go up, but that's not the majority of their portfolio. The majority of the portfolio is finding things that drop and them just leveraging that, right? So I'm going to show you a specific hedge fund. And here you go. John Thaler, Hampton Road Capital Management, okay? Assets under management. So AUM means assets under management. Just tells you how big of a portfolio these guys are working with, okay? This guy's working with $250 million, okay? That's no chump change. Last year, his rate of return on his portfolio, that $250 million, was up 47% in 2020, okay? What I want you to focus on this is not what he was actually making last year, but I want you to focus on what he's actually looking to invest in. I don't know if you can see, but it says global technology and consumer goods, right? So this guy is banking that global tech is going to be what thrives him going into 2021. Let me give you another one. I felt like DJ Khaled, another one. Check this guy out. Looking like a handsome gentleman over there, Eduardo Costa. Okay, this is another gentleman in a hedge fund, Calixto Global Investors. His assets under management is $285 million, which is no chump changing. His return in 2020 was 47%. Are you seeing the trend here? So these guys are making 40%, 47%, like it's nothing. They're doing it like it's nothing because, again, they're investing in a way that, again, they're banking on things going down, and they're also hedging their bet on things that are going to definitely go up as well, right? So they have this little balance. So they make money in each direction. But look at what he's focused on. His focus is on global tech, similar story, right? Consumer stocks, primarily in the small and mid-cap market. Now, if you've been with us, you know that we've been talking big about small and mid-cap markets, right? That's something that we talk about all the time. Why? Because I know that market is the market that's going to save us in 2020 and 2021. And obviously these hedge funds who are investing 250 million plus, they think what we're thinking. So I just wanted to show you that this is an article on my iPhone, so you guys can pull that up anytime. It's something that, I definitely want to just let y'all know, like that's why we do this. We do this because I don't want y'all to be in a position where you don't really know what the big boys are doing. I'm going to tell you what they're doing. That way you don't have any sort of guessing games. You're not going to have to guess. This is what hedge funds are doing. They're looking at two specific sectors. Now, what is small cap? Let's go back to the basics. Small cap is any company whose market cap is below, I think it's 4 billion, but I could be wrong. Let me make sure that I'm correct. I don't want to be wrong. Because I always talk about small and middle cap in the same boat. I don't really try to separate them because to me, they're all kind of in the same basket. But anything under 10 billion really is what I would consider a small cap. But I'm going to make sure that I have my perfect numbers. That way you guys can't tell me. Small cap, under 2 billion. Okay? So small cap is any company that is under 2 billion in market capital. Okay? That's a small capitalized company. A middle cap company is a company between 2 billion and $10 billion. Any company under 10 billion satisfies that hedge fund manager's idea. He wants anything that's small or middle cap. That's an industry that's going to save a lot of us. So folks, if you're joining me right now, you can simulcast us on YouTube. I don't know how many of you guys are over there. Let me go check. Okay, we got some heads over on our YouTube already. Okay, cool. So if you want to, just go to the link in my bio and you can follow us on the YouTube. We kind of show you how to look at things. And actually right now I'm going to segue into our Black History section. So right now I want to talk to you all about something called Black Wall Street. How many of you know about Black Wall Street? How many of you have been educated on Black Wall Street? Just by a show of hands in the room. We've got some folks in the house. Ashley, what's up? Vicant, what's going on? Lexi, how you doing? Love Shante, what's up? Oh, Dimple, oh, all the people are in here today. Okay. So how many of you knew about Black Wall Street? If you're on our YouTube, you'll see I have a article up. And I'm going to go over this article real quick because, again, this is the type of stuff that we want to talk about. We're talking about wealth. We're talking about wealth management. We're talking about, trying to figure out what hedge funds are doing and how to, short the market or how to long the market and make sure that we're still making money in 21, regardless of what's happening. But before we get into that, I want to talk to you about what happened in Tulsa, Oklahoma in 1921. A wave of racial violence destroys an affluent African-American community seen as a threat to white-dominated American capitalism. Shall we read? So in 1921, Tulsa, Oklahoma, Greenwood district, known as Black Wall Street, was one of the most prosperous African-American communities in the United States. But on May 31st of that year, the Tulsa Tribune reported that a black man, Dick Rowland, attempted to rape a white woman, Sarah Page. Whites in the area refused to wait for the investigative process to play out, sparking 2 days of unprecedented racial violence. 35 city blocks went up in flames, 300 died, and 800 were injured. 300 people died in 2 days. Defense of white female virtue was the expressed motivation for the collective racial violence. Accounts vary on what happened between Page and Rowland in the elevator of that Drexel building, yet as a result of the Tulsa Tribune's racially inflammatory report, black and white armed mobs arrived at the courthouse. Scuffles broke out and shots were fired. Since some blacks were outnumbered, they headed back to Greenwood. But the enraged whites were not far behind, looting and burning businesses and homes along the way. 9,000 people became homeless. Now, why am I talking about this? I'm talking about this because this is Black History Month. For me, Black history is every freaking day. I don't wait for this month to understand things like this. But just know that there was a time in 1921 where this happened. This displaced people, murdered people without due process of any kind whatsoever, based on an allegation that wasn't even founded, right? To this day, we don't even know if that was a founded allegation. But guess what? The damage was already done. When you burn down 60 acres of land that is prosperous and is primarily run by African-American business owners and blacks who are literally doing the most entrepreneurial types of things, you are destroying the largest and most profitable the most profitable group of us. Like, you literally burn that whole place down. It's not the first time that's happened, but that was the most egregious time that it happened. Now, why am I talking about this? I'm talking about this because I want us to know that if this succeeds, if our plan at the way succeeds, and all of you learn how to invest properly, all of you learn how to become entrepreneurs, all of you know how to put your money and position it and collectively become a force to be reckoned with, something like this has happened before, and it could happen again. Granted, hopefully it doesn't, but guess what? In the Capitol, they just rioted at the state Capitol. So I am not going to underestimate anybody when it comes to this, right? I'm gonna take this off because I can hear myself. I'm not gonna underestimate anybody when it comes to what you can or cannot do in this country. America is not the place that I trust when it comes to racial tensions. I don't. However, I'm going to give them no choice but to respect me, because you're going to respect my money. You're going to respect the power that I wield with this money. You're going to respect the equity that I'm giving to my community. You're going to respect the fact that I'm going to have a group of kids learning how to invest better than you. You're going to respect the fact that we have families that are going to be functioning as a unit and working together and supporting each other. Like, this is what we're building in 21. If you're not about that life, you are on the wrong YouTube and Instagram IG live. You're on the wrong platform right now. You don't need to be here. If you don't believe in any of those things, you can just unfollow me, click off of this, and just go about your merry way on Wednesday. I'm sure there's a basketball game you can watch. But right now, I'm focused on this type of stuff because guess what? We can change this. We will change this. And it starts with economic freedom. When you are financially secure, that is when this changes. When you don't need anybody to tell you, here's a check for $1,400 as a stimulus, and you can say, no, my investments made that last week. I'm good. You're good. My buddies and I just created a small account. That account has doubled in size in the last 30 days. Imagine if you knew to do that when you were 18 or 20 or 25. By the time you're 35, 45, 55, you're going to be in a great position where economically, no one can tell you anything. And that's what we're building here. So folks, when I talk about Black Wall Street and we talk about what happened in 1921 in Tulsa, Oklahoma, the people that created this, their kids are still around right now. And their kids are probably working in the companies you're working in. Right? So a lot has changed, but some things haven't. And for us, we need to now educate ourselves in a manner where we're ready. We're ready. I'm not going to be caught sleeping in 2021. I'm not. So everyone, I want you to understand, know your history, understand why we're doing this and why it's important for us to be able to be economically free. It's important for us to understand finance, to understand investments, to understand how to position ourselves. All of this is important because when we had it ready, when it was all set, a group of racists burned that whole thing down and killed a bunch of us because we figured it out. I want to see them try that now. Try that now. Try that now and see what happens. That will not be the same way, right? So folks, I'm going to calm back down now. Back to investments, right? Let's get into it. So let's get into why we're going to be different, right? So the first thing we're going to do is we're going to look at small caps. We're going to look at middle caps, and we're going to look at industries that are going to be foolproof when it comes to the next 5 years. That is how you break through this type of volatility. So one of the secrets that we're going to discuss today is one, we've talked about it before, but it's dollar cost averaging, which means that you consistently contribute to the same shares every single 2 weeks or every month, like clockwork. Whether the market is up, whether the market is down, it doesn't matter. We have to change our thinking from I want to make sure that I buy at the lowest price to I want to own as many shares as I can afford until I'm retired. That is the new thing that we're doing now. We are no longer interested in a GameStop 500% tomorrow. We're no longer interested in buying the NAD. We're no longer interested in any stocks of any companies that are managed poorly or that are run by people who don't really care about their shareholders. We don't care for any of them. We're going to invest in industries and in companies that are well run and in the right position. Under 10 billion market cap, able to grow. That's all we want. Now, there's a company that we talked about last week, and they were part of the Reddit, scandal, as you can call it, right? And they were, I'm going to give you the ticker symbol, SNDL, Sundial Growers. Okay, it's a cannabis stock, and I want to show you the difference between a cannabis stock and a stock in the right industry, even if it's part of the same Reddit article, right? Because both of them were in there. Sundial was in there, AMC was in there, GameStop was in there, right? But SNDL, and if you're looking at our screen, we're going to go over to it. I want to show you what they did. My Yahoo don't want to work today, huh? Check this out. So during the same time that this Reddit article, I'm going to go back 6 months, right? Okay, so if you're not on our YouTube, you're not seeing what I'm showing, which sucks for you, but I'll just explain it to you. So Sundial Growers Inc., they're a cannabis company. Their short-term, middle-term, and long-term growth outlook is pretty high. Their market cap is 1.63 billion. So they already satisfy my requirement, which is under 10 billion market cap in an industry that's going to be able to grow and going to be run. It's going to be around for the next 5 years, right? Those are the three things I want to see happen. Okay, cool. So they were part of the Reddit article, and they had a bump in their revenue from January 25th. They went from 56 cents up to February 1st. No, sorry, I'll go up to 81 cents. So from 51 to 81, right? So almost 40% growth in one day. And then from there, they went from 81 up to 121, $1.21. Okay. And these are like pennies, going from pennies to over $1. Now, why is that important? Unlike AMC and unlike GameStop, this actually had the right industry working in its favor. You see the difference? So the same thing that happened to GameStop should have happened here. If everything was equal, Sundial Growers would also be back down to 56 cents. Just because, again, it was part of a Reddit article, people jumped their money in, boom, hedge funds shorted it, came out. Like, that's what would have happened. However, the difference between a stock in the right industry and a stock in the wrong industry is simply this outcome, which is this thing is still making money. Why? Because it's in the cannabis space. They recently amortized their debt, which again is a symbol for me of you're trying to be more efficient with your money. So anytime you're doing something like that, that is a good sign. It's a good sign that you see the value in making sure that you've renegotiated your debts so that you can actually grow the right way. Another thing that they did was they issued more shares of stock because they wanted to get in more capital in order to continue growing, buying more buildings, expanding their operations. This is the kind of company that you really have to jump in on early. Just because, again, if you were in it at 56 cents, your money is already doubled in a month, right? It's already doubled. I didn't even jump in with enough money. Like, I wanted to jump in with a lot more money than I did. But I'm going to come back at the end of the month and I'm going to do what I do. Because again, dollar cost averaging, similarly going into a company consistently over time, right? At $1.21, how many of you cannot afford a share of Sundial stock? How many of you? There's no one on this call that cannot afford that stock, right? And my thing is, that's a good thing. You know, for me, the cannabis market is wide open, period. And that is why I'm invested heavily in it, because I don't see it being a laggard. I don't see it doing weird things. Even if everything is going crazy in the market, the cannabis industry is at the beginning of its run. It hasn't even started yet. So when you're banking on an industry to actually expand, and they're planning on expanding by the billions, the cannabis space, right? We need to get ahead of that and make sure that we're invested in those cannabis shares so that we can actually continue to ride with them. Now, let's just say that this company grows from $1.21 to $10, right? Wouldn't you be happy about your portfolio if that happened? Let me give you an example of when that happened. Company TLRY, and I think Motor Group, you talked about this earlier. Let's look at them. Look at what they've been doing. This is called Tilray Inc. TLRY is their ticker symbol. I'm gonna go back 6 months, as I always do. And 6 months ago, these guys were, it was a $7 stock 6 months ago. In August 14th of 2020, Tilray was selling for $7.25. This is before Joe Biden won the election. This is before the cannabis space got that jump lift, you know, before all of that. But if you knew that cannabis was slowly growing and getting more states involved and getting more access to more people, then you would have seen that purchase anyway. Because again, that's just looking at the industry and knowing that this industry is going to blow up. Let me get some of the companies that are in here, right? That are in here. How many of you would go back to August right now to get cannabis, to get Tilray at $7.25 right now? How many of you would do that? Because if you would do that, I'm suggesting that Sundial is potentially the exact same company when it comes to how much growth it can have. From 7 to 26, Sundial's at $1.26. Even if it goes to $5, it's already done more than what Tilray has done, because you're starting at a smaller number. And that is the beauty of investing in the right thing early. If you bought 1,000 shares of Sundial at 56 cents, right? That's about $500. How much would that be worth right now? Right? And that's my point. You spend 500 and now it's worth 1,500 just because you bought it at the right time. That's how we need to think. Excuse me. We need to think in a manner of, we need to invest for the future, but also know that whatever we're investing in, it's going to give us the returns that we want over time. I don't want you to be real millionaires overnight. I don't want that for anybody. I want you to be a millionaire over time. All of you. Every last one of you. And what it takes is you investing in companies that are in the beginning of their journey before they get there. If you want to get into Amazon right now, how much is Amazon right now? How much is Amazon stock? Let's see. $3,312 for a share of Amazon stock. Like, I would love to get into Amazon right now, but I can't. If you look at our chart right now, though, look at this chart. And this is why I don't care about these guys. I don't care about large cap companies. Unless it's Tesla, I don't care about the rest of them. Why? This company, on August of last year, they were selling for $3,100 per share, right? Now they're selling for $3,312. It's literally done almost nothing in the span of 6 months. I just showed you Tilray. 6 months ago it was $7, now it's $26. Which company would you prefer to be in? Like, literally right now, I mean, and I'm not, telling you guys to do this because, again, I can't give you financial advice, so they say. But I can tell you what the hell I would do, right? So if I had 10 shares of Amazon stock, I would sell it. I would probably keep one just as a keepsake because I want to know what's going on with the company. So I'd sell the other 9, though. And then I'd invest all of the 9 literally into wheat stocks. And that's what I would do. And I'll pick and choose which ones I want. Like, I'll do a little bit of Tilray, a little bit of Sundial, a little bit of Afria. Like, I'll just, pick and choose which ones I want. But I would rather have my money invested in something that can double or triple over the next 6 months than something that hasn't really moved in 6 months. Granted, it's a great company. And if you know Amazon's revenue, this last quarter, they killed it. Like, when I say killed it, that's probably an understatement. They destroyed and obliterated it. They performed as great as they can. But as a shareholder, you didn't really see that in the account. You didn't really see that in your portfolio. It's just doing steadily this, but you didn't really see that. Why? Because if you were wise and got Amazon when it was 33 bucks, you're still killing it, right? I'm saying for the rest of us who didn't, let's get into an industry where we can talk about it, 5 years, 10 years, 12 years down the road and say, wow, we got into this stock at a time where now it's not crazy. And remember, Amazon wasn't always that expensive. In 2001, Amazon was $10. Every company starts as a small cap, all of them, every company. But if you invested in Amazon at $10 in what was this? What year is this? This is January 1st of 2001. $10 a share for Amazon. If you owned 100 of those and now it's worth $3,000, guess I'm done. Conversation done, right? Marijuana, cannabis stocks have the potential to grow. Not as great, not as gracious as this, but still getting in at $1, getting in at $10, even $26 is still a steal because that industry is going to grow. It's going to grow overnight. So what I'm suggesting is look at what you're investing in right now. Ask yourself, are you in a position in an industry that is primed to grow regardless of what the market is doing? If you are, then you're going to be set. If you're not, you're going to need to watch more of our Wealth Wednesdays so that we can give you more tips on different companies to look at. Because again, you need to be in the right industry and know what's coming up next. What's coming up next is renewable energy, green technology, solar. That's big. Even properties like malls. I think there's a stock called, what is their name? Hold on, I'll pull it up. Simon Property Group, SPG, right? Simon Property Group has been growing this whole time, and ain't nobody at the mall. Let's look them up. And again, these are the types of things that I want you to kind of have in your feather cap for going forward. Like these are the companies that you have to kind of keep in mind. We've had a pandemic, and over the last 6 months, these guys went from $62 in August 5th of 2020 to $93 in the pandemic. This is Simon Group. These guys own malls. How are they still making money? How? Because folks are going to start going back to the malls. It's a thing. We love shopping at malls. That is a thing. So the property value is not going down, and they're going to start getting more tech companies that are going to try and find brick and mortar locations in malls. It's going to be a thing that happens. Are you invested in something like that? Do you know that that's a good angle? It is. This pandemic is not going to forever, and we'll go back to how things were. And guess what? People that own malls are going to still make money because they own the land, they own the property. They're leasing out to people. Think of it this way. If you own the property outright, okay, every piece of money that comes in is rental income. So Simon Property Group, if they own the entire land that the mall is built on, whenever they rent it to a store, that's profit every time. How is that model going to lose money, especially when they're going to be primed for this rebound when the market opens back up, when malls open back up, when everyone gets their vaccine, if they're getting it, or they just have immunity naturally, it's going to be a thing. So you got to look at these types of industries and figure out, okay, how can I position my portfolio to have a little bit of these stocks in them? Like I would say, you don't have to have, all of your portfolio in Simon Property Group. I'm not saying that, but if you have 10 shares of that, how's that going to hurt you? Something that grows from $60 to $93, that's a win. So we need to diversify with things like this so that we're not waiting for the market rate of return from a mutual fund or waiting for the market rate return for the S&P 500. I've outperformed the S&P 500 all year. I've outperformed them my entire career. Like I don't use them as a benchmark. If the S&P does 4%, I'm usually doing 6%. If the S&P does 5%, I'm doing 25. Like that's just how I think because that's what I've seen, that's what I've done. I don't care what the S&P does. So you can't buy me with the mutual fund idea. Like I'm done with that. I don't care for that. I want to buy good companies that are going to make money. Okay, everyone with me so far? Let me check the chat because I've been just going off, and I know that y'all are trying to talk to me, and I'm going in. Ashley, if I wanted to move my funds from Robinhood, what would be the best approach? I want to switch to E-Trade. Switch, girl. Just switch. I mean, depending on what kind of account you have, if you have an IRA account, you may need to open up that type of account with E-Trade first, and then you can roll the money over into that IRA account. It's a very simple process. Typically what happens is you have to sell out all of your positions with Robinhood. So they have to cash out all of your stocks and then transfer it. Now, here's my thing. I'm not really okay with that because I don't want you to lose any type of money off of the growth of your stocks in that time frame. However, I do hate Robinhood, so I understand the reason for the move. Just know that there's going to be you could potentially lose some money on some of your stocks. So for example, let's say that, your stock that you bought was worth $1, now it's worth $40, you made $30. When you sell out that position, you're realizing that gain automatically, right? When you realize that gain, if you're not in a Roth IRA or a traditional IRA, you're going to be paying tax on that money next tax season. So if that's going to become a taxable event for you, you may want to just leave it in there and just start investing in something else, just fresh. But if it's not a taxable event, let's say it's an IRA of any kind, well, then just transfer the money. Just cash out, transfer it, buy the same stocks that you had, and just be done with them, because I don't think that you should have to deal with that foolishness. Janelle, let's see. It's a shame I didn't learn about it until college. Yep. Investing in stocks. We needed to know about that at a young age. I read somewhere that the dollar changes hands in the community 14 times before leaving. Today, the dollar leaves our community in 60 minutes. I'd say 60 seconds, damn it. But 60 minutes is not bad either, but that's still horrible. Our black dollar needs to stay in our communities, period. Black and brown dollars need to stay where they're at. And at least try your best to invest and support each other. Like you have to. Everyone else is doing it. Why aren't you doing it? Shante, terrorist, white supremacy. Yep. That's how they roll. Talk about it. Yes. Oh, you guys are having a whole conversation in here, man. Wow. Applied knowledge is power. Amen. This is what, yo, brother Tice, we're already on the same wavelength already. You and I got stuff. So we just got to do what we're doing. Denali Guilty, how you doing? Honesty, what's going on, brother? Blue Ocean opportunity to have a great wealth transfer. Yes, doubled. Thank you for the heads up on till rate. Yep. No one. Vice hand. That's what it's about, man. We got to give each other the tools. I don't expect you all to have a portfolio like mine yet, but before we're done, all of you will have a portfolio better than mine. At least that's what I'm aiming for. Because at least if that's what you have, you're making 50% on your money. If that's where you're at and you can do better than that, then you and I need to talk and you can give me some stock tips, right? Because we're sharing here. Sharing is caring. So everybody, let's help each other out. Pam, what's going on? You got through. What's going on? What do they teach in school? Oh, they they didn't teach that in school. They're not going to do that. Dimples Deluxe, they're not. But that's okay. We'll teach it in our own schools. We'll teach it to our kids. All right, our school is at home. We'll teach it to our kids. All right, Fiaz, what's going on? I just left what I have there and opened up another account. Okay, so Janelle, you already did girl, you don't even need me. You're already doing what you're doing. I thought you were able to transfer through brokerage accounts. You are, but you have to sell out your position. They don't let you transfer the stocks over. That's not usually a thing unless it's within the same broker dealer. But if I'm wrong, tell me that I'm wrong in a DM so that I can make sure that I don't say that the wrong way. But typically the way it works is you always have to sell out your positions into cash before you can move it. Ashley, your E-Trade account's an IRA. Okay, perfect. Roll it over. Get it the hell out of there. Your E-Trade account is an IRA. Okay, cool. So you're fine with that. Good Rookies podcast. Those are my people. Do you trade Forex? I was using Robinhood. Ellie, get off of Robinhood, man. It's just not, they're not built for us. There's not enough options there. They cannot really give you what you need. Let's say that you're with a TD Ameritrade or a Merrill Edge with Bank of America. At least if you have a huge brokerage account with them, you can leverage that and actually get loans for your businesses. You can get, better access to leveraging your money with even margin accounts. You can get a lot more things that you can do stuff with that Robinhood won't give you. So Ellie, I'm specifically talking to you. Make sure that you get the hell out of that if you can and get something that's going to give you leverage, because it's really important that you can do things with your money. Let's talk about margin for a second. When you're invested in the right broker dealer, they actually give you access to money based on your balance. So let's say you have $100,000. They'll give you a margin account of $50,000, usually half, maybe 25%, just depends on how much money you got in there. You can literally trade their $25,000 of your $100,000, their $25,000 margin. You can literally trade that every single day. And if you're good and you're making 5%, 10% that day, you can literally close out your positions and not spend a dime on that margin. Now, let's say that the margin call, let's say the margin interest is 0.5%, which is usually something small. It's never like a large amount of money. And you're going to give me 25 grand and you're only wanting 0.5, so 5 basis points for that. Cool. I'm going to make 25% on that. I'm going to do that little 0.5 that you want back. And now I have, instead of 25,000, I have 37,000. Cool. Like, that's what people do all day long. There are day traders that just trade on margin by itself. That's how they make money. And once you're using other people's money to leverage your money, you're going to make a killing. But again, if you lose money, you still have to pay back that margin, right? And if you don't pay it back, they'll take it out of your account balance. So there is a trade-off. It's not just freeness and whatever. No. However, investing the way we're talking about right now, I will take a margin account all day. But guess what? Robinhood won't offer you one. because they're not that way. They're not built for that. So get into a space where you can get margin, trade options, like you want all the alternatives. So get out of freaking stupid places that don't let you trade stuff. Okay. All right, cool. All right. So I want to get into we did Black Wall Street already. Okay, hedge funds, we did that already too. Okay, cool. All right. So way that we're gonna do this, how much time we got? 20 minutes. All right, so folks, after this, I'm actually on an IG live talking about stocks. So if you like this, just follow us, follow me on here. Make sure you follow the Way podcast. Babe, can you put in the Way podcast for us so we can pin that? Follow our page, our Instagram page there. And like I said, if you like what we're talking about today, please visit our website, which is pinned currently. It's www.theway.com, and just donate. You know, you can donate $1, donate $5. I mean, why we're collecting this and we're trying to get folks to understand that we do have a philanthropic arm or a nonprofit is that we want to start putting together financial literacy courses for kids. We want to teach them how to trade stocks, how to look at investments, how to be more knowledgeable, to basically do what our parents couldn't do for us. We want to run a program for kids to do that for free. And to do that, we need help. Like, you can't just go running free programs. You got to have some kind of fiscal backing for that. So we want to definitely do that. And the ultimate goal for the Way Foundation is really to create a foundation. Like, we want to have scholarships we give out every year. Currently, right now, we're working with Jamaica. We have some students down there. We actually sponsored 3 kids right now for their school, their meals. And, you know, during the holidays, we send them gifts. Like, that's a very small charitable thing that we're doing right now. Doesn't take a lot of money to do that, but it's something that we've started. And we want to kind of raise that number from 3 kids to at least 10 kids by the end of next month. And then hopefully by the end of this year, we want to raise it to 100 kids. You know, so for us, this is not just about the US or about the Caribbean or about Africa. It's about all of us. I don't care where we are. You know, it's important for us to invest in each other. And my thing is, if you're getting any value from what we're talking about today, about stocks, about the cannabis industry, about what hedge funds are looking at, about Black Wall Street, if you're getting any value from this, I want you to think about that in a way of, how are you giving that back? I don't just want to make you a bunch of money so that you can be rich and wealthy. No, because wealth to me is not how much money you account. It's what you have in here. And the more kids I can make wealthy here, the better off all of us are. Because they're going to be the one taking the baton from us. The same way we took the baton from those folks from Oklahoma whose stuff was burnt down, 300 dead, like all of that, we're taking the baton from them and trying to move it forward. So we have to educate kids. So that's going to be a part of our foundation. So folks, if you are interested in any of that, please just hit us up. And I don't like to ask people for money, so this is the last time I'm going to ask y'all. All right. So I appreciate you all. And let's get into a couple of stocks that we've been looking at. So if you're on our YouTube, I'm going to give you another symbol. And again, I do this every week because I want you to know what I'm looking at so that you can see, you know, how to view this. The company is called FCEL. Let's look it up. FCEL. Fuel cell energy. And again, like I said, renewables, green tech, that's the kind of stuff that I'm interested in during this time frame, because that's really what's going to make a difference. Now look at the chart. The way that I look at these charts is, and again, they're saying that there's a bearish, short term is a negative, middle term is lateral, long term is positive. Okay, cool. This company's market cap is $7.3 billion. So it's within our small cap area. And 6 months ago, in October 1st, it was trading at $2.10. In October. That's not even 6 months ago. It's less than 6 months. It's like 4 months ago. Trading for $2.10. Now it's trading for $22.88. Okay? Again, we're talking about companies that are small capitalized companies growing into large capitalized companies. This is another example of a company that's doing that. Now, why are they doing that? Literally after the election, November 4th, this company jumped from $2 to November 13th, it was $2.85. And then November 18th, it went up to $5, doubled in price in literally what, 15 days? And then from there, from November 20th until December 20th, it went to $9. Again, another double, slowly just moving up the chart. And then January 11th, $15. You see the trend. Growth stocks that look well, that's what they do. They grow in a certain fashion that's very consistent and is going to continuously do that. Now, how you know whether or not this is going up or down. And this is our little trick, folks. So pay attention to this. If you're not on our YouTube, get over there. We're showing you how this works. So all you're going to look for is the previous low. The goal is when a stock is in its growth phase, you want to make sure that it doesn't go below its previous low, because if it does, that means it's trending in a bearish state, which is it's trending down, and you may want to like look at, you know, whether or not this is still a good position for you, right? So right now, this stock, the lowest, then the previous low was here. On January 25th, it was at $17. Okay. So all you have to know is that as long as FCell does not go below $17, $17.94, as long as it doesn't go below that, it's in an uptrend. Keep investing, right? That's how you can tell. You always look for the next, for the low. So stock market does this. When it does this, you book that if that's the low. And if it's going up, that's fine. If it drops again, make sure it doesn't drop below this number. Has to stay above that. As long as it does that, you now mark the next low and you keep writing it up to understand if it's in or out. Okay, that's how you track a stock. And if you're not on our YouTube, I'll show you that. I guess you can just review it a chance. But that's really how you want to track the stocks. So right now, this is in a growth phase. So to me, that's still a beautiful chart. And year to date, look at that. Year to date, it's done from $10 to 22. It's doubled in 34 days. Right? So this is where our money needs to be. The small cap market, the middle cap market. This is what hedge funds are banking on. This is what investment advisors are banking on. We need to bank on it too. So the two things that I want to leave you with today is and I got to wrap up the next 15 minutes. So if you have any questions, feel free to hit me up. Just throw it in the chat. We're all here. Okay. Yep. If you have any questions, just let me know. But you know, two things I'm gonna leave you with. First thing is, when you're investing, regardless of the Reddit, stocks and everything else, you need to make sure that you're positioned in the right industry. Industry matters. If you're not in the right industry, you're setting yourself up for failure automatically, because tech and cannabis, for example, those are industries that are beginning to become conglomerates. Like they're beginning to scoop up other smaller versions of themselves and literally become the next large caps that are going to be out there, like the Facebooks, the Amazons, the whatever. Like that's what you got to look for, you know? And we talk about stocks and we talk about companies and industries. And when you see something work in one market, it's going to work in another. Like it's just, that's how it works. So I'm gonna give you a stock, and if you're not on our IG, that's fine. And I think my wife had mentioned this the other day, but I want to look them up because, again, you know, it's good for you to see how companies, even in other countries, are still doing good things. So Craig, China Recycling Energy Corporation, they're a recycling company, right, in China. And as the population in China increases, they're actually getting more green. I know, China has NEO, which again, EV technology, they're having electric vehicles. They're in that phase now where they're looking at actually renewable energies, looking at, saving the environment. That's where they are as a nation. And because they are a nation like that, they're going to do things in big ways without caring about the outside world. Like China's always been that way. Like they're going to just, if we're moving in this direction, we're going to move. Our emperor says move, we move, and that's it. Like that's how they move. So Craig, I had invested in this company when they were 22 cents a share. This was last year in March. If I can go back that far, I don't think it will let me. It will not let me. Oh, will it let me? Okay. It's not showing me the actual number. So they had to consolidate their shares at one point last year because they were below $1 on the stock market. And you know that if you're below that for too long, you just get kicked off the market. But anyway, so back then they were 22 cents. This was a company that had literally invested in at 22 cents. It went up to 30 cents, went down to 16 cents, been back to 22 cents. And then one day it popped to 66 cents in one day, which is like almost a tripling in value. I sold it as soon as it did that. Similar to what a GameStop and an AMC, it was the same kind of thing. I know, like if it's up, you shouldn't have been up that high anyway. I'm out. Like you just have to know, right? So stocks like that, you can't just set it and forget it. You got to watch and be patient. But when that stock came out, they were at 22 cents a share. Now they're trading at $7.42, right? So from 22 cents to $7, what kind of growth is that? And this is in another country. This is not even here. But let's look at their profile. You know how we always do this. We go in, check out the company's profile, read up on them, see what they're about. So China Recycling Energy Corporation engages in the recycling energy business in China. The company designs, finances, constructs, installs, operates, and transfers waste energy recycling projects to mid and large size enterprises involved in high energy consuming businesses. It provides waste pressure to energy solutions, including the blast furnace top gas recovery turbine unit, a system that utilizes high pressure gas emitted from the blast furnace to drive turbine units that generate electricity. Think about what that means. You're taking something, putting it on top of a furnace that's already waste. It's not even like, it's just waste furnace, right? And the heat that is in there is spinning a turbine that now generates energy for the factory. Green technology, right? How many of you have heard of Craig? I'm sure none of you have. I've heard of them. Why? Because I researched every green company wherever it could be. I'm like, I want to know in China. I want to know in Europe. I want to know where, any green company, I want to know what it is. Why? Because in the future, a company like this could be a very, very good potential investment. Now, if you've never heard of Craig, I'm not saying to invest in Craig right now. Not saying that. I don't have any positions in Craig currently at this position, but I don't see anything wrong with it. Would I invest in Craig? I would. But I want more interest in what they're giving me right now. That's just me. I'm being greedy, which is fine. But Craig is the type of company that over the long run, let's say over the next 10, 15 years, they're going to have a stock price of maybe $25, $30. Just because, again, China as a country is moving into that direction. They're moving into renewable energies, into green space, into EVs. You got to look at the trend. If you see them looking at buying, electric vehicles, like that means the country as a whole is concerned about the global effect of carbon. And if this company, Craig, is literally recycling waste from the top of these towers, that could be a win. Another one that I'll give you before we end off, because it's 8:50. And again, like I said, I have another live with Sue Knows Business, who just joined. If you guys haven't, please follow Sue Knows Business. She does lives with entrepreneurs, with folks from different industries, just gives you a little bit of a understanding of what they're about, what they're doing, just to kind of make you more knowledgeable. So I'll be on with her literally at 9 sharp. So I'm ending this one early so that I can get there on time. All right. So folks, the last one that I will share with you, Uberbot, Drizzly, good, Uber. Janelle, let me look here. Okay, you want to see what Uber is? Okay, let's look up Uber real quick. Uber. Ticker symbol UBER. You know how we do this? Go to 6-month chart. Uber's been, it went from August last year, it was $31. Now it's $57. Its chart, it's a little choppy for me, but here's a beautiful thing about Uber. Uber is not just invested in cars. They do more than that. And for folks who don't know what Uber does, like Uber Eats, Freight, Advanced Technologies, ATG Group, ride segments, their eating segments. Again, they do different things, dockless e-bikes, e-scooters. They do shipments. So Uber isn't just the guy that you're picking you up from the corner. Like they have a diversified revenue stream. So they're going to be primed for, growth steadily. I wouldn't buy them yet though. Just because again, I don't know how they're going to handle the pandemic when it's tapering off, right? Because Uber Eats is only useful when I can't go to the store. When I can go to the store, that's less revenue for you, right? So that part is the part that I'm not sure about. And that's why when I say look at the industry, look at what it could potentially do. If you're looking at Uber and you think that Uber is a good stock, well, hey, you might be right. But I'm just saying that when the pandemic ends and businesses are opened up, food places are opened up, how many of you are going to be ordering from Uber still? I know I'm going to go to the restaurant and enjoy my meal there. So that business model part of it is something that I'm not really on, as opposed to something like Peloton. We talk about Peloton all the time. And I mean, when I look them up, PTON, they continue to increase in value. Like these guys know what they're doing. Look at their 6-month chart, right? 6 months ago, August 10th, 2020, they were $67. Now they're $147, right? Their business model is designed to get people to work out at home digitally and have live streaming classes. Like they're already figuring out that once I get you on this bike, you're going to want to be on this bike before you want to go into a gym. Like their strategy to me is a long-term kind of bet. And I'd have more confidence in this than I would in Uber. Even though Uber is diversified and they have Uber Eats and they have the transit, the transportation aspect of it, I'm not a big fan of it as I would be of a Peloton or even any of the cannabis stocks. Like honestly, Tilray, I would invest 10 times in before I'd invest in Peloton or Uber at this point. So I'm cannabis stocks right now. Where do you look this information? Okay, so where do you, Rashad? So I use the iPhone has a stocks app. that I typically use, any stock that I like. So any of the ones that we mentioned today, just load them up on your, if you have an iPhone, load it up on your stocks app and just follow them. I usually check out my iPhone maybe every 3 hours. So at 9:30, I check it. At 12 o'clock, I check it. And at 3 o'clock, I check it just to see what my account was doing. But I don't really follow it too hard. If I'm already invested, I know what my accounts are going to do. Like they're going to grow. Like I don't have to really stress out about it too much. They just bought, okay, they just bought it for $1 billion. Yeah. And listen, that's going to happen. This is the time for acquisitions. Like, honestly, people need to know that your company that you've purchased, it could be bought by somebody else. And if that happens, you might make a killing. People are lazy. The drop won't be that bad. Yeah, exactly, Mr. Ward. That's correct. I see Uber collaborating with Amazon if they don't already. Well, here's the thing about Amazon. Just so you guys know, a little quick tip. Amazon is actually looking to get EVs. So Uber won't be able to partner with them because Amazon is looking to change their entire fleet to electronic vehicles completely. So what you should look at is, who are they trying to partner with to buy to create these vehicles? Who is going to make the Amazon electric vehicles that Amazon's going to have for its entire fleet? They're changing their whole fleet out in the next 10 years. The whole thing. So as an investor and as an economist, I'm going to say, which company are they going to partner with that's going to make these EV vans and little mini trucks that they're going to be using to deliver Amazon goods? Who are they now? Can I buy their stock? When Amazon jumps on them, their stock price is going to fly. Do you know who they are? I do. If you want to know, you can DM me. I'll tell you. But if you want to do your research, look up who Amazon is looking to partner with to make their electronic vehicles for their entire fleet. That would be a better buy than Uber, right? So think like an economist. Do not just get stuck in certain things. Think like an economist and know that you got to be ahead of the wave. All right, let's see. Stocks and trending information about companies. So Rashad, honestly, Yahoo Finance is my best friend. I use Yahoo Finance for everything. So anytime you see a stock and you want to see how it's trending, all of the trends and financial analysis is actually there. You can look up their balance sheets, their cash flow statements, their income sheets, what their projections are. You can see all that on Yahoo Finance and it's free. So utilize those resources. Again, you don't need to know the most to invest. You just need to know where to go and what tools to utilize to look for it, right? Hey, Chevy, what's going on? How do you feel about the vaccine stocks, modern advisor? Again, vaccine stocks, they're the fad. They're a fad right now. Some of them are boosting up. Some of them are going up by 20% in a day. I see all of that. But long-term, I don't trust it. Reason because vaccines, once they're shown to be inefficient, if that happens, or some sort of scandal happens with that, their price can fall just as fast as it went up. So with pharmaceuticals, they can fly. And if you're in it at the right time, you have to watch it every day. You cannot take a day off. So so Moderna, Pfizer, all those companies, you can invest in them. Let's look up Pfizer real quick. Pfizer, for example, as a company, let's see what they're doing. They're not even doing that well. 6-month chart, look at it. Come on. Look at their 6-month chart. That looks like crap. I wouldn't invest in that, right? So Pfizer's stock looks like garbage. I invest in it? Hell no. So again, the industry matters, but these pharmaceutical companies that are coming up with these 2nd round trials, 3rd round trials, all that stuff, you have to watch the news on those things. So if you want to do pharmaceuticals, know that you need to be on top of your news for those pharmaceuticals every single day, or just don't get involved. And if you don't have that kind of time, invest in cannabis stocks and just be done with it. Don't stress yourself out trying to figure out every damn move of these pharmaceuticals, because that's not going to work well for everybody. Like, that's just not how it goes. And we have 2 minutes. So folks, Rashad, listen, DM me and let's get a conversation going on. Let's get you moving and grooving. Everybody that's on this call, please DM me if you have any questions about stocks that we mentioned, ideas about how to invest your strategy. If you have some sort of, brokerage account questions or whatever, hit me up, DM us. We're here for all of that. All right. So folks, Wealth Wednesday. All right. So hopefully you guys got a lot of tools out of this. The goal again for me is to make sure that you all know that we're here for you. We're here to support your financial journey. Please, again, feel free to, let us know how you feel. DM me, follow the Way podcast, check out our website, look on there for more information and look for our podcast episodes. It'll be there. And folks, I will be on a live in the next 2 minutes. So if you're hanging out, hang out or talk some more stocks. All right. So Ellie, you're welcome. Hey, Steve, you're late. That's how it goes. But yeah, so everyone, hopefully y'all are good. Thank you so much again. And I'm going to be hitting up the other live for Suno's business. So folks, until next week, stay safe. Remember, that is wisdom. That is knowledge. That is what we're building in 2021. No time for games. All right. Peace out. Love y'all. Take care. YouTube. I haven't left y'all yet. Hopefully you guys found that informative. Right? That's kind of what needs to be. You know, I'm here to give you guys the scoop on what's going on. And I think, to me, honestly, that's really what makes a difference, is when you know what you're looking for, right? So that's what we're going to do. So everybody, appreciate you guys. Right now I'm uploading that video on IG, so you guys can check it out. If you were on here, then you don't really need the IG video because you got like better stuff anyway. So folks, love you guys. Appreciate your support. Again, like I said, if you want to, show us that you care, hit up our website, donate to our cause. We're a nonprofit, so you'll get a tax receipt slip, so you can say that you donated. You get that as a write-off. So, everything that we do is for the people, it's for you all. And we want to really get this course for students. We really want to get this going. So appreciate you guys. Thank you for being the best way tribe we got. And look forward to seeing you guys next week, Wednesday. All right, take care. Peace out.